If you already have a VA loan and nobody has told you about the IRRRL, and not My Name is Earl, the old TV show, but the IRRRL, the IRRRL, then somebody's not doing their job. This is the simplest and fastest refinance in the mortgage world. No appraisal, no income, no asset verification, but there are minimal qualification requirements that exist in this paperwork. This refinance exists for VA loan holders only. So let's get into it. So what is the IRRRL? The IRRRL is a VA refinance designed for veterans specifically because honestly, it's the greatest home loan on the planet. There are requirements for the timeline. There are requirements for the process. There are requirements for the rate, okay? All set down by the VA. All us lenders work with the same processes. There is no special privileges for some jackass on the internet who told you that you can do it in less than 210 days, or you don't have to drop your rate of 0.5%, or all these things. People will tell you those things. And I'm sure some of you, if you have a VA loan, have gotten those text messages from all these turds out there who work for UWM partners who want you to refinance or maybe use your loan officer's name to address you, because they've done that to my clients. It's the most sleaziest, shittiest thing ever. Let's talk about some of the mechanisms of the IRRRL. What makes it so great for you? Number one, no appraisal. Don't have to worry about that. No income verification. Don't have to worry about that. Now, if we may verify that you actually have a job, but we're not going to verify the income amount. Okay. I think that's fair. Okay. But let's talk about what that actually means when it comes to the VA appraisal. The VA wants to waive these requirements because it speed ups the process. Number one. Number two is if you're not refinancing $30,000 worth of closing costs, and you're not going to have any appraised value issues. We're dropping your rate enough. There's recoupment processes we have to go through, and we'll share that here in just a few minutes. But more importantly, if you're new here, my name is Jason Stier. I am the VA boss, and I've spent 22 years serving military families, helping them have financial freedom using this VA home loan benefit. So I'm glad you're here. This is your first time. Welcome back if you've been here before. So let's talk about a little bit about the break-even math. So the VA sets a hard stop when you do a VA refinance at 36-month recoupment of the closing cost. That's not prepaids. That's not taxes, insurance, prepaid interest, and the funding fee. Okay? That's hard closing costs. Title fees, origination fees, lender fees, all those are lumped into this recoupment thing. You have to recoup the cost of the refinance in 36 months, which basically takes the threshold of, if you're saving, $200 a month, that's $2,400 a year, and your closing costs are $6,000. Well, you're going to fall under that. Okay. So, but that's just where this starts, right? Professionals like myself will work through these with you and show you what your new loan amount's going to be, what your new rate's going to be, what your 5, 10-year, 20-year savings is this rate. Now, sometimes it may not be worth it, y'all. You have to pay attention to this because there's too many people out there trying to sell you on this refinance that don't give a shit about you at all. All they care about is doing a loan. So they're not going to walk you through what this might look like in the financial picture, because maybe you're going to be in the house for 5 to 6 years. Well, why would you want to do a loan that's going to take you 3 years to recoup? That's moronic. It doesn't make any sense. But there's shitty lenders out there who will do that just because they want to sell. Okay? So if you have cash out needs, an IRRRL won't work. You can't take cash out on an IRRRL. If you want to do, pay off debt, which I don't ever recommend doing a cash out refinance, paying off debt. I hate that. But if you want to do improvements to the house, we're looking at leveraging debt, depending on where your interest rates are with those debts you may want to pay off versus what you're going to have. We're going to walk through all those calculations to look at a blended rate on that. Okay. Maybe you're moving soon. Okay. Maybe you've been in the house 10 years and extending it back to 30. That doesn't work for everybody. People will do that because they see this large payment savings and their eyes get huge and they're like, oh my God, I can save $500 a month. But yeah, but you're extending your term out another 10 years. So let's look at that and let's have an honest discussion about numbers. Okay. So there are many ways to go through this. There's a lot of noise in this space right now for veterans. I get constantly people text messaging me all these shitty, especially from the Federal Savings Bank, and I will say their name out loud, drives me berserk about what they do and how the VA, the Veteran Legacy Program, get the hell out of here. It's an IRRRL. Stop. But I've gotten so many phone calls about this stuff. And there's so many vultures out there who are sending out flyers and postcards and mailers. They'll even use my company on there or my name. It's so gross. And it's really kind of illegal on top of that. Okay? Because we're not all built the same, right? We're not. So we have to make sure that you're lending on relationships, that people are showing you this pathway, not just saying, hey, I can drop your rate a 0.5%. You good? Yes, no? Yeah, okay, let's go. That is so lazy. Okay, this is not a McDonald's drive-thru, right? Because you have to have a net tangible benefit, okay? What the VA requires us as a lender to prove that we're not putting you in a bad financial situation. That's what this is. There's a fiduciary responsibility for us to be able to do that based on federal guidelines that protects you, the veteran. But there's so many people out there who don't give a shit about you. All they want to do is get a sale. You have to remember that, okay? So here's what I'll say, is that if rates have dropped since you closed on your VA loan, or if you've never shopped your current rate, okay? Even in this, the rates are high, I can't do it now. Man, it's not necessarily true, okay? The IRRRL might be the fastest way to put some money back in your pocket every month, but it may not. What it requires is an honest discussion about what those numbers look like and how we can break that down for you. And people who come into my ecosystem get all of those things because it is your benefit. It is not your job to tell me how it works. I'm the financial person. I will walk you through this, and that is what's required here. So next week, I'm going to do something a little different. I'm going to tell you what the VA loan won't do. You heard what the VA loan won't do. Because a lender who only tells you the good stuff isn't your advocate. So do me a favor, subscribe, hit the little bell down there for the notification, book a call if you want to run numbers or just have a conversation about your benefit. I will certainly take the time to do that for you. Link is below. See you next time.